friends, welcome to RV Academy. Hi students, in my previous video I explained what is cash flow statement, what are the various sources through which the inflow and outflow of cash will happen in the organization, and also we discussed about the format of cash flow statement given as per accounting standard 3 AS3 indirect method. Today I am going to work out two problems of 6 marks section B. Please look at this problem. Calculate cash from operating activity from the following: profit and loss account opening balance, that is 31/3/2005 given as 60,000, 31/3/2006 65,000. Debtors 85 and 48, bills receivable 40 and 81, general reserve 1,72,000 and 2,07,000, wages outstanding 26,000 and 8,000, salaries prepaid 8,000 and 10,000, goodwill 70,000 and 60,000. In this, both P&L related items as well as current assets and current liabilities are given. First part, we should find out the net profit before working capital changes by taking the profit and loss account and adding back all non-cash or non-operating expenses which previously deducted by the financial accountant, and deducting the non-cash or non-operating incomes which is added by the financial accountant earlier. So now, first you go to the problem. Profit and loss account 60,000 and 65,000 is given. Take the net profit. The difference between the closing and opening balance becomes the net profit for the year. 65,000 minus 60,000, you get 5,000 rupees, that is profit for the year. Non-cash or non-operating expenses, just go through the problem. Debtors, bills receivable, wages outstanding, salaries prepaid comes under current assets and current liability. Here we have general reserves. General reserves opening balance was 1,72,000. Closing balance is 2,07,000. So the difference between the closing and opening is 35, that is transferred 35,000 from profit and loss account to general reserve account. It is a non-cash expenditure. So 2,07,000 minus 1,72,000, that comes to 35,000. And at the end, goodwill rupees 70,000 and 60,000. Goodwill is written off to the extent of 10,000. Goodwill written off is non-operating expenditure. Goodwill written off, patent written off, copyrights written off, trademarks written off, preliminary expenses written off. All these becomes non-operating expenses which is deducted by the financial accountant earlier. Now you should add back goodwill written off 10,000. When you add these two, total comes to 45. 45 plus 5, 50,000. Non-cash or non-operating income, there is no any such incomes are given in the problem. Just put nil and the final answer comes to be operating profit before working capital changes, that is called to be 50,000. First you take the net profit, add non-cash or non-operating expenses. In this case we have only two, general reserve and goodwill. Add back to the profit which was earlier deducted and deduct the non-cash or non-operating income if any. In this case there is no any such incomes. The final answer comes to 50,000, that is operating profit before working capital changes. Now we have to make a working capital changes plus increase in current liability. If current liability is increasing and current asset is decreasing, the cash inflows we should add. So increase in current liability and decrease in current asset. Here you can see debtors 85,000 decreased to 48,000, means closing balance is 48, opening balance is 85. It is decreased by 37,000, that means the cash inflow. Then wages outstanding is decreased, that is current liability decreased, outflow of cash. Salaries prepaid increase, that is current asset, increase in current asset, outflow of cash. There is no any other item apart from debtors. So 50 plus 37 comes to 87,000. Now minus decrease in current liability and increase in current asset. If current liability is decreasing and current assets are increasing, it is outflow of cash. Now you can see here bills receivable 40,000, 81,000. Bills receivable is a current asset increased by 41,000. If current assets are increasing, increase in current asset, just this formula, reverse it. You just reverse it, you get the answer. Here increase in current liability and decrease in current liability. Decrease in current assets, increase in current asset. So increase in BR 41,000. Increase in prepaid salary. See, you can observe prepaid salaries 8,000, 10,000 increased by 2,000. Similarly, outstanding wages is a current liability. Outstanding wages decreased by 18,000, that is 26,000 and 8,000. That means 18,000 is paid during the previous year or current year. So when you add all this, 61,000 is outflow of cash. Here you can see BR and prepaid salaries are current assets, it is increasing, and outstanding wages is a current liability, it is decreasing. All these three we have to add up and write it here. 61,000. Final answer 87 minus 61, net cash from operating activity. This is one kind of a problem. I'll work out one more problem now. Look at this problem. Calculate cash from financing activity for the following data. Issue of equity shares 5 lakhs. Issue of 9% debentures 4 lakhs. Redemption of preference shares 2 lakh 50. Raising of long-term loan 3 lakh 50. Repayment of bank overdraft 2 lakhs. Dividend paid 1 lakh. Interest received 50,000. Then sale of furniture 1 lakh. Here, if shares are issued, long-term liability, if shares are issued, debentures are issued, long-term loans are raised, then it is inflow of cash. Add. If any redemption is made, payments are made, minus. In the cash flow statement, first part is operating activity, second part is investment activity, third part is financing activity. Here they are asking us to find out what is the cash from the last part, that is financing activity. Issue of equity shares results in inflow of cash. So issue of equity shares. They issued equity shares by which they received 5 lakh rupees cash. Then issue of 9% debentures. Issue of 9% debentures, again inflow of cash. If cash is coming in, add. If cash is going out, minus 4 lakhs. Redemption of preference shares. Redemption means repayment. Cash goes out. Redemption of preference shares. Cash will goes out. Redemption of preference shares 2 lakh 50,000. Raising long-term loans. When long-term loan is raised, it is inflow of cash. Raising long-term loans, its inflow of cash 3 lakh 50,000. Raising long-term loan 3 lakh 50. Repayment of bank overdraft. Repayment of bank overdraft comes under current liability. Sometimes there is a lot of arguments against and for with a bank overdraft. Some people say it is a long-term liability, some people say it is a current liability. So in this case, if only this part is given, you can consider either way. I will consider this as a long-term liability. So repayment of bank overdraft. Repayment of bank overdraft 2 lakhs. Then dividends paid. Dividend paid will result in outflow of cash. Dividends paid 1 lakh. Then interest received, inflow of cash. Interest received, it is inflow of cash 50,000. Though it is a non-operating income, while preparing the cash from operating activity, interest received from the profit in the financial activity, we have to add back to the profits, because add back to the cash flow, because the cash is coming in, though it is a non-operating income. Sale of furniture does not comes here because it is a investment activity. Any furniture is sold, fixed assets are sold, comes under investment activity. It does not comes here. Now you can find the total of this as. It comes to 13 lakhs and this comes to 7 lakh 50. The final answer becomes 7 lakh 50, called to be net cash from financing activity. Simple. Here, whenever there is a inflow of cash, add outflow of cash minus. Issue of shares comes into, the cash comes into the business, add. Issue of 9% debentures, cash comes in by issue of debentures 4 lakhs. Long-term loans is raised by which you receive 3,50,000. Interest is received. In the first instance, we will going to deduct in the operating activity as a non-operating income. Though it is a non-operating income, you received the cash, so that we have to add it in the financing activity. So totally it comes to 13 lakhs. Redemption of preference shares means repayment, cash goes out 2 lakh 50. Repayment of bank overdraft, either you can consider this as a current liability or long-term liability, since there is a lot of arguments against and for with bank overdraft. Some author says it is a long-term liability, some author says it is a current liability. Now only this part is asking, I will consider bank overdraft as a long-term liability, and repayment of bank overdraft results in outflow of cash. When dividends are paid, dividends paid is a non-operating expenditure which will be added back to the profits in the profit. Your cash goes out, you have to minus here, dividends paid 1 lakh. So total of cash inflow is 13 lakhs, total of cash outflow is 7 lakh 50. So 13 lakhs minus 7 lakh 50, net cash from financing activity 7 lakh 50. So these are the various types of questions which appears for section B, from operating activity or from investment activity or from financing activity. Any one part will be asked for section B, and next video I am going to work out 14 marks problem on cash flow statement. Please like, share and subscribe my video. Thank you. Some of the book I published for BCom and BBA of BCU and BO for Skyward and Sapna Book House. Please make use of it.